When I first started trading, trend lines were the most exciting thing that I think I'd ever found. And very quickly, I started to realize that maybe something isn't quite right. It seems like the perfect strategy, doesn't it? You draw out a trend line, you wait for it to be tagged 2 or 3 times, or 4 times if you're lucky, and you take a sell or a buy from that 3rd, 4th, 5th tag, whenever it is. But if any of you have traded it and tried to back test it, you'll have probably found that it doesn't work that well. You've got to remember that this is a multi-trillion-dollar marketplace, and if you could simplify it to just drawing a line, connecting 3 dots and selling from it, then obviously it would be pretty easy to make money trading. It's taught because it's simple, and it's taught because it's easy to understand, and it gives you this kind of false hope that everything's going to be amazing, you're going to make millions and millions of dollars. But like I said, if you've tested it at all, you probably find that it doesn't really work. Now, what I'm going to teach you today is a way that you can trade trend lines and a couple of rules that are basically going to make you profitable if you want to continue doing it this way. Personally, I feel that there's better ways of trading. If you hit me up on my Instagram @StrongMoneyForex, you'll find lots of tips and tricks. I use an advanced liquidity concept in my trading, which kind of debunks most of the trading strategies out there. But look, let's get stuck into it. Let's talk about trend lines and we'll go from there. Before we get started, if you can do me a massive favor, just hit that subscribe button. It helps me massively and it allows me to continue providing you this free YouTube content forever and ever and ever. So let's look at this chart, okay? Now, we have a downtrend here very, very clearly. Let's just zoom in on this downtrend, okay? What we do is we're looking at this. We're on the hourly time frame, okay? And we've got 2 connections. We're clearly in a downtrend, okay? We're clearly in a downtrend. So what we're saying is we're expecting that when this trend line gets tagged once more, we are going to be buying from it. So we play out price. We wait for price to hit that trend line, and then we take a buy. So we place a buy entry there, stop below the low, first target off here, brilliant. 3R, hold it out, fantastic. Nice, easy trading profits. So then we hold out, and we expect the same thing to happen, okay? So we're waiting for another, this is now a valid trend line, okay? Because it's rejected price 3 times. So let's just drag that out a little bit more. If you're enjoying this video so far, do me a massive favor and pop me a like. Okay. So the next time price tags this trend line, we're going to be getting into a trade, right? So let's wait for it to happen. Okay, fine. So the trend line is now broken. So we must be going short because based upon basic breakout strategy, we'll be looking at this now as a break. So we're holding for say a 2R. And then before we know it, yeah, brilliant. We've got a little bit of movement, which confirms our trade. And then it pushed back up. And then it pushes back up and takes us out. So we're like, it's okay, the trend line is broken, we are in a downtrend anyway, so we'll take another setup from here, we'll place maybe a slightly wider stop, and then we'll play this out even further, okay, and what happens, okay, we get stopped out again. Now this happens over and over again, and there's a reason why, okay. Firstly, the trend line isn't what's holding price. That's the first thing you need to get into your head, okay? What is actually holding price is various liquidity points to the left, okay? The trend line itself has a confluential factor. Not sure confluential is a word, but we'll go with it. And it is an area that there will be people getting into trades, but the big players that move the market and the algorithms that are moving price up and down, unfortunately, don't look at trend lines, okay? It's just a happy coincidence that this happens. And what you'll find more often than not is this happens, where you feel like the trend is broken and then it sweeps and then breaks out, okay? Now, once we've had these 3 touches, the value below these areas is really, really high because this is where now retail will place their stops, and you'll have more and more stops and more entry orders for sells the more times that these points are tagged, so they become more attractive. But what you'll actually find if you zoom out a little bit is that there are liquidity points here at play as well. So here we had equal lows, price swept that, tagged the trend line, and then rejected, which is why that first one worked out so well. If you move across to here as well, we've got an external level. So if we take that external level, we drag it out there, we have an external level, and that is the momentum which actually changed price's direction. That there is an external level that we've taken out, which is why that's done that to price. Okay. Now what happens after this is there are lots of orders placed into the marketplace at these trend lines, and the algorithms know where those orders are sat. They can literally see them and they manipulate them. Okay. So this got me thinking, there's something in this. And do you know what? The simplest way for you to trade trend lines is to actually not trade them. And what I mean by that is, don't trade trend lines in the conventional sense that you find taught for free on YouTube, okay? The chances are, if you find 1,000 videos based upon the same trend line strategy, it's probably going to fail. And what is actually a lot more profitable is trading trend line rejections. So this is a good example. We have a trend line. That trend line was rejected. Stop above the high, entry after the rejection is closed, and first target off down there. Okay, you will find these on every time frame over and over and over again. We've got a nice 4-hour example here, so we've broken out from the trend line. Now what's great about this is if you can combine this with higher time frame liquidity as well, and by liquidity I mean highs and lows, because it's the highs and lows where orders are sat, and therefore the highs and lows that the algorithms and the bigger players will look to be manipulated. And if you draw out previous highs, you will find that they cause big reactions in price. Okay, these major kind of swing points that are sat on their own, that one hasn't worked obviously, but then we had another one here to the left. These major swing points that are sat on their own, they will normally have some kind of bearish reaction. Okay, they may not hold price to complete a big bearish move, but you can see they're swept and then they're rejected over and over and over again. So if you can find one of these trend line positions with a liquidity point to the left, it can actually become a really profitable trade. Very, very simply as well, you'll just enter like this. Every weekend, I host a Sunday webinar with my mentorship students. Starting from March 2024, I'll be opening this up to my YouTube family too. Get an insight into the way that we trade, the strong money Forex strategy, and a taste of the profits. The best part is, it's completely free. All you have to do is head over to my Instagram at strongmoneyforex and send me a DM with the word webinar with a stop above the high and then profit off at that first low to the left, and you've got yourself your entry. Now, I've gone to the extent of actually drawing a few of these out, and you'll see that actually they happen over and over again. And where they are great is in heavily trending conditions. For example, if you look at this bearish run down here, I've drawn out a few here. Every single time in these kind of pullbacks, and what you want to look for is this congestion. You want to see price kind of consolidating, getting narrower and narrower, and then what happens is price will create a buildup of liquidity. It will then raid that liquidity, and then you can really, really simply, okay, enter off the back of it like that. Stop at that first low. Beautiful trade. Got another one here. Okay, so we've got dot to trend line. Okay, trend line's been manipulated. Stop here. Sorry, entry here. Stop there, and boom, manipulated. Okay, so if you start looking out for these, you'll find them pretty much everywhere you look, okay? And instead of trading in the conventional sense where when price gets to the level, you take an entry, wait for it to be manipulated first, and then reject back in. And then it's that simple. Once you have the rejection and the close back underneath that trend line, you just set your stop above the high, hold down to either first target or lower target if you want. That's completely up to you, and you can get into some really, really profitable trades trading this that way. Okay, so this is your new kind of trend trading strategy, and what I would suggest that you do is you just test this out in the marketplace. Okay, you'll see that it will happen over and over again. Okay, this one actually holds this time. Okay, and like anything, it will hold some of the time. Every trading strategy has, you know, its legs. Every trading strategy will have moments where it holds, but what you'll find is that if you draw on every trend line that you see, what you'll probably find is that it probably loses more than it wins. And this is what I found, and this is what I teach to my students. And if you want to find out more about that, then head over to my Instagram at StrongMoneyForex, where I provide loads and loads of free content on a daily basis. Okay, if you look at especially the higher time frame, and you know, if you are to be using trend lines, the where they are most valuable, and this is, you know, like any trading strategy really, is on the higher time frames, you'll see that actually you can get into some really tasty trades by trading the manipulation of the trend line. You will find them absolutely everywhere. You just need to wait for a breakout, then a close back below. Once you've got that close back below, you put a stop above the high, and that's it. Okay, this could be the simplest and easiest trading strategy I think I've ever taught on YouTube. And as you can see, these patterns will happen over and over again. Now, I'm not cherry picking here. I'm going back randomly in the marketplace and just looking for kind of key highs that I can see. Okay, you'll see that they happen over and over again. What I'd suggest that you do is you go and do exactly the same. Let's try and find some bullish examples. That's a higher time frame example I found for you guys earlier. I go to the daily. Okay, let's try and find some bullish examples as well. So we've got one here. Okay, we've got a breakout. That one might have been a loss, as you can see. So we've got a bullish example here. Let's mark that one on. There to there to there. Okay, we're going to take a buy. Stop below the low. First target here. Let's try and find some more bullish examples. I don't only look at bearish examples for you. Let's try and find some trend lines. So we've got, no, there's not really one there. Okay, and the important thing when you're looking for your highs and your lows to trade off the back of is that they've got to be clear and obvious as well. You can't just be, you can't just be taking absolutely every single, point as a trend line. It's got to be, these kind of significant points that are stood out on their own, okay, because that's when you get that manipulation, as you can see there, and then you can get in off the back of that. Buy, stop, hold, brilliant, okay. So hopefully that's opened your eyes a little bit, okay. You'll find that the more you look at these points and the more you look for these trend line positions, what happens is psychology will play a big factor on the reason why people are buying from this trend line. So orders are placed in apprehension of the trend line being respected. And what happens is the algorithms and the institutions, they target these levels. So what they're saying is they're going to be selling, and they add in extra selling pressure, which is why often at these levels you have these kind of impulsive moves down. Let's look back at some of the previous trend lines that we've drawn on and just jump up a time frame. You'll find that they're often quite impulsive moves where they kind of wick up and down. And that's what's important about it, okay, is that it's got to be a quick move up and down. When you see these moves, you'll see there's a big push out. Why are people buying so heavily at that level? I tell you why they're buying so heavily, because they know that people are going to be selling from that level, so they know it's very, very likely to be manipulated. And what you'll see is that often these moves above or below these trend lines will be very, very fast. And that's because they quickly buy out, then all the orders get activated, people's stops get hit, people's buys get entered, and then it quickly reverses the marketplace. And this is what they class as a classic retail trap. Trend lines, especially three-touch trend lines, are classic retail traps. And if you start opening your eyes to the fact that actually this may not be as effective as this educator on YouTube, and you've got to be careful about educators on YouTube because most of them don't make money. If you want to check me out, like I said, head over to my Instagram, you see all my profit. I have a Telegram group that you're welcome to join, and you can trade along with me completely for free. I hope you learned a little bit today. Thank you so much for watching all the way to the end. If you have seen some value in this video, please pop me a like below. I'd really appreciate it.